Hello and welcome everyone to Gold Asset of the Day for the 23rd of June 2020, presented by myself, Phil Carr, at the Gold and Silver Club. So firstly, as we go into a new week here, we have banked 530 points on gold. We've also got a new long position on platinum, which is currently up 100 points. And again, congratulations to everybody who watched Gold Asset of the Day last week, and you also looked at our week ahead commodity reports, because what we've essentially expected has played out. That usual counterflow at the beginning of the week, last week on Monday, where gold tapped down to $1,704 per ounce. By Friday, we'd seen a breakout up to $1,742 per ounce. Subsequently, at the beginning of the week here off the open, we've seen a breakout to $1,760 per ounce here, with gold sitting right at 1 month highs at the moment. In fact, we're very close now to breaking above the 7.5 year highs here for gold. So again, well done to everybody who's capitalized on these moves. If you're not making money in the markets at the moment from the metals, you absolutely should be. We've just seen some incredible moves lately, and it really has been a case of buying the dips here on the precious metals. And of course, in the latest week, we've seen hedge funds and money managers yet again increase their net long positions in both gold and silver contracts. And we've also seen a updated forecast for Goldman Sachs, which is anticipating gold prices to hit $1,800 per ounce within the next 3 months, $1,900 per ounce within the next 6 months, and $2,000 per ounce within the next 12 months. And of course, at the beginning of this week, we've already seen gold very close to breaking out towards those 7.5 year highs. Again, it's worth being mindful with the intervention that we've seen from central banks around the world since COVID-19 really started to accelerate, has been both cutting of interest rates and of course unprecedented amounts of quantitative easing, which is having the impact here where we're seeing that flow into both the stock markets to support equities, but also this is very much following through into safe havens and the precious metals, where we're on the cusp now of gold breaking above the 8-year highs. And this is an absolute perfect time for you to learn a research-driven approach to the markets. We mentioned on the week ahead commodity report that many traders had got in technical sell shorts at the beginning of last week, not aware of the usual counterflow and not aware of the Federal Reserve's intervention, and therefore they got stopped out of their sell shorts at the beginning of last week, expecting downside for gold, whereas we've been positioning long, and we've of course seen this subsequent breakout on gold, banking 530 points, and now we're building a position on platinum as well, which is currently up over 100 points. So a research-driven approach will give you additional edge in the market, where you're not just using technical analysis, which doesn't work in these market conditions. Just purely using 100% technical analysis is not going to give you enough information. It's not going to give you an edge. And of course, with trading, the beauty of this is that it's recession proof, and also where you've got interest rates around the world going to zero and even negative in Europe, this means that your money and capital is going to work harder for you as opposed to being in the bank and earning you no interest at all. It really is time to take control of your finances, take control of compounding as well. And of course, you can see very clearly the opportunities being presented right now with gold, with silver, with platinum. Just great times to be getting into the markets as we transition into July, August, September, which are typically very strong months here for the precious metals. Hence, the Goldman Sachs has also just come out with their updated forecast here, looking for $1,800 per ounce for gold over the next 3 months. So what I'm looking at here between now and the end of June is a further uptick here on gold. As I mentioned to on the week ahead commodity report, essentially you want to be buying dips at the moment on gold, but don't FOMO in and get in too high. You want to be utilizing the retracements here on gold in order to establish further positions, and also look at the correlations with silver and platinum that I mentioned. We've already built another position here at the start of the week, which is up over 100 points. Bear in mind the gold silver ratio, which is breaking down at the moment, providing further support to the metals, and also the US dollar index, which is breaking down this week, providing further support to gold priced in US dollars. So with that, if you would like to become a member of the Gold and Silver Club, learn a research-driven approach to the markets, where you're going to be positioned the same way that the hedge funds and money managers are in the market, as opposed to the retail traders that are constantly getting stopped out of their trades and chopped up, or they're completely missing the moves entirely, where you're taking into account macroeconomic data. You're going to be looking at cycles, seasonality. You're going to be using our in-house market intelligence and then marrying that up with fundamentals, with technicals, and this is what will give you an edge in the market. So of course, if you would like to find out more, just click in the link below today's report to find out more information about becoming a member of the Gold and Silver Club. So with that, that's been Gold Asset of the Day. And of course, I wish you good trading.